Good afternoon, good morning, good evening, whichever part of the world you are in, and welcome to another market review. This is Dr. Musa speaking. This review is going to be on foreign exchange and the energy markets. Well, actually not foreign exchange and markets as such, but specifically for the Indian audience looking at the USD INR and the crude market and how that is probably going to pan out and how and the effects that we could expect on our lives going forward. Before we go on, as usual, the disclaimer: this is not financial advice. Please do your own due diligence before making any investment decisions. This is for information and educational purposes only. So as we start, it is Friday, 27th March. Not yet 5 p.m., but by the time I finish, it should be close to that, and we'll try and keep it as short as possible. With that, let's jump into the charts. And what do we see? What you have is the DXY. What is the DXY? Well, not the DXY, sorry. You have the crude chart. Now you have the DXY. What is the DXY? For those who are new, the DXY is the dollar index. It is a global index that is basically used to track the strength of the dollar. And what you're seeing here is just a plain chart with nothing else except the dollar index built into it. And this is a monthly chart. And what you can see is that in 2000, 2001, if those of you remember the dot-com boom, the dollar index had really gone to its multi-decade peak of 119. And then as the 2008 crash happened, it came to a low of 71, 72. And then in the last few decades, or many years rather, more or less been flat, you could say, between 89, 90 on the lower side and then 100 on the upper side till 2022, and then went up to 111, came back down to 101, was recently at around 96, 97 for most of, or let's say the second half of 2025. And right now, they're at 100 and looks like trying to go back up, right? So that's the uh, monthly view. Now, if you look at it in the closer daily view, you will see that clearly the dollar index has been climbing, and from a low of Jan of around 95, we are now at 100. So almost a 5 point, you could say about 4-5% appreciation in the value of the dollar from its recent lows. But overall, no substantial change in the dollar index. Though, as you can see right now, it seems to be inching up. As we all know, the Israel, US, Iran war is still on. At that time, the safe havens are the ones that where the money tends to move in. We just did a webinar on gold yesterday, and we asked the same question, but gold has actually moved down and actually quite substantially come down from its life high by about 25 to 30%. On the other hand, however, dollar has definitely appreciated ever since the war broke out. It was about 97, 98 before the war broke out, and now has crossed the 100 mark. So definitely some movement in the dollar side. Like I said, the dollar index is just an index used to measure the strength of the dollar. The way it is created is that there's a basket of 6 currencies: Swiss franc, euro, the UK pound, German franc, not euro, the Japanese yen, etc. Right? The euro has the heaviest weightage of about 55, 57%. The rest of them are divided into the rest of the 5 currencies. So it is used to measure the strength of the dollar. So obviously, if the dollar appreciates, then other countries, other currencies are depreciating against this, right? Now, which brings us to what is happening on the India side. Some of you would have, those of you who are on my broadcast list would have received the post uh, yesterday, day before, that the rupee had hit 94, right? So this is something that we've been tracking for a long time, and the rupee has definitely been depreciating at a much faster rate than the dollar has been appreciating, right? Now, just to give some perspective, in the whole of 23, 24, rupee was around 83, went to a high of about 87 in Feb 25, came down to a low of 84.50. That's quite a big of a correction. But then after that, there's a one-way rise, as you can see. And that one-way rise, as you can also see, is quite sharp, right? And quite steady. Right, a bit of a mess. Sorry about that. That's just the number of studies that I have been doing on the Nifty, oh, sorry, on the USD INR and posting this on various groups that I am a part of, right? Um, yes, let me get that. Yes, right. So before the war, the rupee was at around 91, right? And now we have crossed 94 with a high of 94.84 today, okay, 94.85. So there's been a pretty sharp deterioration in the rupee in just after the war started. So if you're going to look at those values after the war, let's say we just take it as 27, 28, right, of Feb, and after that, the rupee has depreciated 5%, and that's about in a month, right? So we've got a 5% depreciation in the rupee within a month, right? Mostly just the war. That's not good at all, right? That just shows how much stress there is in the currency markets as far as India is concerned. So even though there's a healthy balance of a forex balance, about $700 billion in India, the overall concerns are how the crude oil prices, etc., will hit India and therefore create financial and other problems for the country. And that's reflected in the forex markets, right? As I keep saying, the forex markets are perhaps the most not perhaps, they are the deepest, widest markets, and extremely difficult to manipulate these markets. You could manipulate stock markets to some extent. You can manipulate maybe even commodity markets, individual commodities for sure. But foreign exchange markets, manipulating of that is an extremely, extremely challenging task. Central banks, of course, try and do something, but once your currency is a free float, which India isn't funded, but it is in a semi, not on the capital side, but on the currency side, you do have you don't you as in the government or the central bank has limited control on what that currency will do, and it's basically left to the market forces. And the market forces are clearly telling us that things are not looking positive for the Indian, not only for the Indian currency, but by default for the Indian economy, right? That the economy is going to, or is considered to have been hit quite significantly. So on the left, you see the steady decline on the table there, right? I've been saying to whoever cares to listen that those who can invest in dollars should invest in dollars. Of course, there are various nuances and terms and conditions and tax issues and statutory issues that you need to be aware of. But if you are an NRI, if you are based abroad, you're much better off investing your money in dollars in foreign markets or in your market there, rather than constantly experiencing a currency depreciation against what you bring into India, right? 5% basically is what you gained, you as in the NRI gained by just holding on to dollars. And in a month, instead of getting 91 or 90, let's say, per rupee, per dollar, you would have got now 94, 95, right? And as you can see, this acceleration is just going up. No sign of slowing down. Yes, if the war suddenly were to stop and crude were to fall rapidly, then you would see a reversal on this. But as of now, that is not looking very likely, right? Okay. Now, going back to what we're looking at, uh, sorry, lost my thought for a moment. Now, what explains this depreciation to an extent is definitely what is happening on the crude oil price, right? So this is the chart of crude oil. And if you look at it from an extended perspective, you will see that for the most of 24, 25, crude oil was actually going down, right? It was at $84. This is the futures market at the NYMEX, New York Mercantile Exchange. But generally, you can see the clear downtrend which was there in crude oil over the last 24, 25, right? Hit a low of around 57. This was the time when the Indian oil marketing companies were making nice, hefty profits. Those of us in India know that the oil prices at the retail pump level were not revised down. Neither were the taxes. As a matter of fact, the excise duty on fuel, petrol, and diesel was raised so the government could enjoy that money. It was not passed on to the benefit of the retail investor or even sorry, what am I saying? Retail consumer or even the industrial consumers. So we continue to pay high prices despite lower crude oil levels in 24, 25, with the government of India basically taking a massive cut by continuing to raise excise duty on fuel during this time. And now what has happened is, as you can see, the crude oil price has sharply risen across the world, right, from a low of around $57, $58 a barrel all the way to 119, 120, and then has cooled off, but is sitting at around 96. Now, depending on which crude you talk about, there's the West Texas Intermediate crude, there's the Venezuelan crude, there's the Russian crude, there is the Middle East crude, and all the prices do vary. There are certain premiums and discounts associated with it. But as a benchmark, you can see that this has been the rise. And across all those charts, you will see the same effect. As a matter of fact, what you will see is that a lot of if you look at the news, you would see that crude has been, over 100 on a consistent basis. Just that this is the futures market from NYMEX. You're not seeing that 100, but it did spike there. And this, what you're looking at is the daily chart, right? This cool off that you see here, the big candlestick on top, right? This one, right, was the day when there was some announcement of Trump, and I think strategic reserves are going to be released across the world. There was going to be an attempt to do something about the blockade and all, and there's a big volatility in the crude that day, all the way from 81 to 119, and then all the way down and up. So around 100, right? Now, here's the thing that India, when it comes to India, let's look at the India price and we go for that to the MCX market. That's the multi-commodity exchange in India. And if you look at this, what you saw was priced in rupees per barrel. This is now Indian rupees per barrel, right? So to quickly understand what the Indian cost is, the Indian refiners are paying. Of course, individual cargoes are priced differently, but on an overall, if you look at where the market generally is, you will see that again, as I zoom out, you'll see that the Indian crude price has been for 24, 25 at between around 5,000 to say 6,000 per barrel, but on a continuously down trend. So India has been importing crude at, let's say, on an average of around 5,300 to 5,500 rupees per barrel for the last 2 years. That's 24, 25. And now what has happened is in the last 3 months, as you can see from the chart, we are now importing the same crude at 9,000 rupees a barrel. All hit 10,000 also during that erratic day, but around 9,000, 8,000, 9,000 rupees a barrel. Basically, you're talking about if you want to take what's the reference price, if you even say 5,500 or something around that, right? Let's put it somewhere there, right? And take a price on where we are on an average right now. You're talking about a 60% rise in the price of crude that India is paying, right? Now, clearly, with 60% rise in the retail at the refinery level, this is just crude oil. This is not including taxes. This is not including, all the the state taxes, yes, and then the central government excise taxes are not. But all said and done, if everything were to remain, I'm oversimplifying this, but this is important to understand. We're paying more than 1.5 times the price for crude oil right now. If if this were to be passed on to the customers, assuming that everything we forget everything else in the past, then petrol, which was at around 100 rupees rupees a liter, and diesel, depending on which state you are in, between 85 and say 92 rupees a liter, should have gone up by 1.5 times, which means petrol at 150, diesel at 130, 140. Right now, obviously, that is not what you're seeing right now. But what you do have, as I'm sure that many of you know, let me just bring that up. Just a second. So something that we mentioned in one of the previous webinars, I'm sure you already know about it, is that the premium petrol price was up by 2 rupees and the industrial diesel price was up by 22 rupees. However, the government did mention that the price should have, for the industrial diesel, that is the bulk buyers, defense, railways, but not the state transport corporations, which is, our state transport buses. The price should have been 32 rupees higher, but it was not. It was just restricted to 22. And that was a week back when the crude oil price was a little on the softer side. And then today, what the government did is that cut excise duty on petrol and diesel, right? This is basically to reduce the impact of the end price by reducing the taxes on it. And what they did was they reduced the price of the excise duty on petrol by 3 rupees and completely dropped it from the price for diesel. So 10 rupees was the special excise duty on diesel that has been totally dropped. And on petrol, it has been dropped by 3 rupees, right? Now, all this is fine, but the point is that 13 rupees for diesel, right? So, sorry, for 3 rupees for petrol and 10 rupees for diesel. While all this is fine, the point is that we still are not going to see a reduction in the end price of diesel at the retail level. And like I said, if you are talking about a 60% higher price in crude, this is going to should have had an effect on the retail prices also. But the government makes the oil marketing companies, as the HPCL, BPCL, Indian Oil Company, absorb these price hikes. So they are the ones who are suffering the losses. And so far, the retail customer has been insulated from this. But if the war continues and the price remains above $100, then all bets are off and the government is likely to increase. Nayara, private oil company in India, increased the price of diesel by 3 rupees and by petrol by 4 rupees. And though that really doesn't affect the market because they have such a small impact, they have such a small foothold. The oil marketing companies cover 90%, have 90% control of the Indian market. So when you look at this and you look at this chart, and it looks like the crude oil price could be heading higher, we need to be prepared for very likely higher fuel prices in the maybe weeks ahead. Of course, the big thing is that there are 4 state elections which are coming, and because of that, the government may put a cap on this. But after the 4 state elections get over, then who knows, depending on what the crude oil price is. Now, going back to complete the story where we started with the US dollar INR story. So on the one hand, the US dollar has strengthened, as we already saw, right? And on the other hand, you have a 5% strengthening, 4 to 5% strengthening of the US dollar since the war began. And you also had the crude oil price going up quite significantly by 60%. right? And if you look at that impact, you will see that overall you've seen a pretty sharp move in the Indian rupee. Now, if the underlying economic stress is definitely going to show up sooner than later. But just going back to the long-term chart of the rupee, right? Just something to keep in mind. And let me take off all the clutter, right? This is the long-term chart of the rupee on a monthly basis. So you can see that it's a consistently and persistently depreciating currency, right? You do have some 6 months to a year of sidewards movement. You sometimes do have a correction down, and that is a big relief depending on, if you're an importer like we are, net importers. But in the multi-decade scenario, we are just heading to in, um, if this makes sense, higher life lows on the rupee versus the dollar, right? So something to keep in mind and factor in how you want to pan this out. Obviously, if you are somebody sending money to India, you want to hold on to it to get more favorable rates as much as possible. And if you are wanting to buy US dollars to send it out of India, then you want to be doing that as early as possible. And if possible, if you have the skills and which I would definitely encourage everyone to acquire, and you can actually see that it can make quite a bit of a difference if you can read the markets and look at how things pan out. So crude being a big. So what's happening now is twofold, right? The double whammy. One, you're having the crude oil price go up by 60%, and then you're having the rupee depreciate by 5 or 6%. So we are now paying, as far as Indian rupee is concerned, much higher prices for crude for the imports that we are having. And much the same goes for the LNG gas, liquefied natural gas that comes into our country from abroad. So these stresses, the financials, the cost, fuel is everything, energy is everything, right? And all this is also used for fertilizer production, etc. So fertilizer is another thing whose price is going to be dramatically affected. So the cascading effects and the on agriculture, on food prices, on transportation, on inflation is a matter of time that this is going to seep through the market. So be prepared for that. And well, hopefully you enjoyed the session and it was valuable. I would invite your feedback. If you have any questions, please feel free to get back. Um, Always like to hear something from you and get your inputs and see how you can profit actually from what is happening in the foreign exchange and the crude oil price. Right, Mokari Maka, which in Japanese means "Did you make profit?" which is a traditional greeting in Japan. So I hope this is a profitable webinar for you. Again, this is not financial advice. This is just uh, um, education and information for you. So I hope you do your own due diligence before jumping in. Thank you very much, and I'll see you in the next webinar.